Most investing advice sounds the same. Buy index funds, dollar cost average, think long term. And don't get me wrong, those things work. But today we're talking about the other strategies. The ones almost no one talks about. Not because they're secret, but because they're not flashy enough, not clickbaity enough, or they don't make Wall Street any money. These are the strategies that actually help beginners build wealth faster, avoid painful mistakes, and invest with confidence. 1. The sleep test strategy, the portfolio that doesn't keep you up at night. Before you pick any stock, ETF, or crypto, ask yourself one simple question. If this dropped 30% tomorrow, would I still sleep well tonight? This is called the sleep test, and it's one of the most underrated risk management strategies out there. Why it works? It forces you to invest based on your actual risk tolerance, not what Instagram says is aggressive. It prevents panic selling, which destroys more portfolios than market crashes ever do. It naturally pushes you toward diversification. If you can't handle the volatility of an investment emotionally, it doesn't matter how good the idea is. Your emotions will sabotage you. Warren Buffett said it best, if you can't hold a stock for 10 years, don't buy it for 10 minutes. The sleep test is like that, but for normal human beings. 2. The cash cushion strategy, the beginner's secret weapon. Most investing videos tell you to get every dollar working in the market. But one of the most powerful strategies is something nobody flexes online: holding cash on purpose. Not because you're scared, not because you're timing the market, but because cash gives you opportunity. When the market drops, and it will, beginners without cash either panic, freeze, or worst of all, sell at the bottom. But beginners who hold a small cash cushion, even 5 to 15%, can buy the dip calmly. It also reduces anxiety. When you know you have reserves, you make better decisions. Bottom line, a little cash isn't laziness. It's strategic patience. 3. The boring beats brilliant strategy. This one sounds funny, but it's shockingly effective. Pick investments so boring they'd put your group chat to sleep. The truth? Most of the world's best investors outperform because they stick to things like broad market ETFs, dividend stocks, blue chip companies, index funds, plus target date retirement funds. Not crypto moonshots. Not meme stocks. Not options trading tutorials filmed at 2 a.m. If your investments are exciting, they're probably risky. If they're boring, they're probably stable. Boring investing is predictable, scalable, and doesn't depend on luck. But best of all, beginners who choose boring strategies stick with them, because whisper it with me, boring investing isn't stressful. 4. The set it, forget it, and check it later strategy. This strategy is so simple, it almost sounds like a joke. Automate everything. Then stop checking your portfolio. New investors often sabotage good decisions by constantly monitoring their account. When you check your portfolio 10 times a week, you overreact. 10 times a month, you get nervous. 10 times a year, you make rational decisions. Automate contributions. Automate your ETF buys. Automate retirement accounts. Then set calendar reminders to review your investments only, once a quarter or even once a year. It removes emotion from the system, and emotion is the enemy of long-term investing. 5. The Know Thyself strategy. Most beginners think investing is about choosing the right stocks. Wrong. It's about choosing the right strategy for your personality. Ask yourself, are you patient or impulsive? Do you like learning or prefer simplicity? Do you get stressed easily? Do you care about passive income? Do you want to trade or just set and forget? Once you know who you are, you pick an investing approach that matches your behavior, not someone else's. If you hate research, index funds. If you love dividends, dividend ETFs. If you want automation, target date funds. If you want to learn, pick a few individual stocks with small amounts. You win by knowing yourself, not by beating the market. 6. The longer timeline than everyone else strategy. This might be the simplest but most powerful strategy in this entire video. Give your investments a longer timeline than everyone else. Most people invest for 5 years. Smart investors invest for 10. Wealth builders invest for 20 plus. Generational wealth thinkers invest for 30 to 40 years. When you stretch your timeline, the risk goes down, your returns even out, compounding explodes, plus stress disappears. So those are the investing strategies nobody talks about, but actually work. And the best part? You don't need to be rich. You don't need to be a day trader. You don't need to be a financial genius. You just need a plan you can stick to. Don't forget to like and subscribe. See you in the next video.